Ever wondered how a legacy engineering giant turns into a high-tech semiconductor powerhouse? Today, we're diving into the Q3 FY26 performance of Cgpower, a company that is currently breaking records and building chips. We'll take a deep dive into their record revenues, massive order books, and the high-stakes pivot into the semiconductor world. Starting with the Q3 snapshot, the top-line surge is impossible to ignore as revenue hit a record 2,909 crore rupees, up 22% year-over-year. This growth is being fueled by massive demand in power systems, while the company simultaneously locks in future gains. Their unexecuted order book has exploded by 66% to reach 14,859 crore rupees, effectively securing revenue for the coming quarters. Taking a look at the standalone scorecard, the profitability is impressive. Revenue is up 22%, but EBITDA grew by 33% to 480 crore rupees, and profit after tax surged by 42% to 347 crore rupees. Margins have expanded 148 basis points, now sitting at 16.5%. The real engine behind this growth is the power system segment, which brought in 1,326 crore rupees, growing a staggering 44% year-over-year. This segment is seeing a sharp rise in demand for transformers and switchgear from both the grid and data centers, allowing for strong pricing power and a healthy 21.4% margin. However, it is not all smooth sailing. The industrial systems segment is currently a drag on performance. Revenue here grew by only 8% to 1,585 crore rupees, but margins actually contracted from 12.5% down to 9.4%. This was a result of commodity inflation that could not be fully passed on to customers. On the global front, Cgpower just hit a major milestone by securing its largest ever single export order to supply power transformers to the USA. This 900 crore deal is a massive validation stamp that signals a breakthrough into Western markets and expands their addressable market far beyond India. Now let's talk about the future bet: semiconductors. This segment is in an early-stage investment mode, reporting 111 crore rupees in revenue with a negative margin of 36.1%. In this case, negative margin is a feature, not a bug, representing aggressive spending on talent and infrastructure as they enter the assembly and testing space. Their revenue visibility is incredibly strong thanks to the order book. With a 14,859 crore rupee backlog, which is 1.3 times their annualized revenue, the company has multi-quarter visibility. This backlog helps insulate the business from short-term market fluctuations. They have the financial firepower to fund this growth, carrying zero debt and a fortress balance sheet. With 6,454 crore rupees in cash and equivalents, and having used only 274 crore of their 3,000 crore QIP raise, they have a massive war chest to fund semiconductor plants and weather industrial downturns. There are risks to watch, including a 36 crore regulatory hit due to new labor codes in late 2025 and ongoing commodity volatility. Furthermore, a widening gap between profit and operating cash flow is expected as semiconductor capital expenditure intensifies. The market is pricing this company at a premium with a current PE of about 96x, which is well above its historical average of 72x. With a market cap of approximately 1.07 trillion rupees, the market is essentially pricing in perfection. The bull case is supported by the record 14,000 crore rupee plus order book and the US export breakthrough. Conversely, the bear case hinges on that extreme 96x PE valuation and the fact that semiconductors are currently a drag on margins. In conclusion, Cgpower is firing on all cylinders in its legacy business while building a high-tech future. The fundamentals are elite with a 23% ROCE, but the entry price is steep. It is ideally suited for investors with a long time horizon willing to wait for the semiconductor bet to pay off. If you found this earnings deep dive helpful, make sure to like, save, and share this video. Follow and subscribe ZinvestZ for more such smart investing insights. Thanks for watching.